Good morning and welcome to the Coinbase Institutional Markets Call. It's Tuesday, October the 24th. Wow, what a difference 7 days make. It certainly feels a lot better with the price of BTC comfortably above 30K. As usual with BTC, this move has certainly been pretty aggressive. And even after the retracement we saw after last week's head fake, we're well above those highs. I had to say it really kind of shocked me and in a really great way. David, Greg, curious, how do you guys think about this move higher? I assume you're pretty happy with it?
Yeah, definitely. It's great to see the price of Bitcoin and crypto overall up. Not surprised with the direction of travel that Bitcoin's taken over the last week. I am surprised by the speed of the move, though. I was actually on the desk last night when we traded up to 35,000. And yeah, it was really quite something. A few $100 million worth of liquidations went through on various exchanges, which really begs the question, who's short Bitcoin in front of a US ETF? Found that to be quite surprising. But yeah, like you said, can't complain. I just hope we can consolidate in this range and set the stage for something higher.
Yeah, I think I've just been left with a lot more questions than answers here. To Greg's point, we saw about $320 million get liquidated over the last 24 hours. It's just not clear to me how much of this is new buying versus short getting liquidated. I mean, there's definitely some aspect of this here of people anticipating this spot Bitcoin ETF. There's obviously been some more headlines coming out. This idea that the fake news from last week kind of shows not all of this has been priced in. So I think that's kind of important. It's just, it's not clear to me the new direction of travel as far as how much more upside is to this rally.
Well, let's hope there's a lot more. We're still waiting the actual news around the ETF. So fingers crossed we can at least hold the level, if not grind a little higher. So to our agenda, as is customary, we're going to cover some news, macro, flows, Web3, basically everything that you need to know that's happened in the last 7 days. But before we get started, some quick housekeeping. If you scan the QR code on your page here, or if you check the show notes, if you're listening on a audio podcast, you can get access to all of David and the team's fantastic research. Please don't forget to like and subscribe to us as well. It will help others find the podcast. So some quick plugs before we get started. Our tax VP, Lawrence Zlaklin, had interviews with both Blockworks and Decrypt discussing Coinbase's concerns with the proposed IRS rules. Paul Graywell, our chief legal officer, also promoted the sign-on letter to oppose some of those rules as well. So please check those out. But let's get to the show. Joining us today, we have a very special guest, Paul Yablon, founder and CEO of Room 40. Paul, welcome to the show.
Thank you, Ben. Nice to be here.
Yeah, it's great to have you here. So Paul is a true expert when it comes to managing risk for the last 30 years in both traditional assets and more recently in digital assets. Paul started his career on the training program at Brown Brothers Harriman, spent 15 years as a senior MD at Greenwich Capital, and then more recently in TradFi, spent the last 14 years as a PM at Moore Capital Management before founding Room 40 2 years ago. So, Paul, it's amazing to have people of your caliber in the space. I guess the question you probably get asked a lot, and I'm kind of curious about, is what attracted you to crypto? And then secondly, how did you come up with the name Room 40?
Well, I discovered Bitcoin in 2013, and so I've been following the space and been involved in the space for quite a long time. I would say that after trading every asset in the world professionally, fixed income, equities, currencies, even commodities, I was at a stage in my career where I was looking for another challenge, a new challenge, and it seemed like the future of finance was shifting from the traditional financial rails from the 20th century to new rails that would be 21st century rails. And I wanted to focus my time, efforts, and energy on those new financial rails. So that's what led me to create Room 40. I learned as I was thinking about creating Room 40 that really digital assets were not only assets that were tradable liquid assets, but they were also essentially publicly traded venture capital assets. So I partnered with a couple of venture capitalists, and we hired some crypto native engineers and experts, and we put together Room 40. We have a venture capital fund, and then we have a separate liquid fund, which is what I run, which is structured like a traditional total return hedge fund. The name Room 40 comes from World War I. The British Admiralty started a secret effort to decrypt German messages. It was the precursor to Bletchley Park and Alan Turing and the World War II group that helped the Allies win World War II, and so that's where Room 40 comes from. We thought it was kind of an appropriate name for a digital asset organization like ours.
Very, very cool. As a proud Brit, I'm glad there was a little bit of influence to your name there. Very cool, very cool. So back to my kind of earlier question that I asked both Greg and David. Like, the speed of this move has been aggressive. The size has been aggressive. Like, how do you think about this, and has it surprised you at all?
Look, I'm always surprised when markets make dramatic moves, but we were somewhat prepared for this kind of a move in the crypto markets. Really, it was born out of a very apathetic environment where crypto natives had kind of lost faith in the space. People had given up on the Bitcoin ETF approval process, and importantly, implied volatilities were at very depressed levels. There were people selling implied volatility, which means selling options just to collect small amounts of premium. So indeed, the fuel for a really strong rally was there, and you just needed a spark. And I suppose the spark has been very much catalyzed by two things. One is obviously the expectation that an ETF may be coming earlier than originally expected, and that was catalyzed by the grayscale ruling, and then of course the lack of an appeal by the SEC, and the expectation that the court has basically told the SEC that they need to approve conversion of grayscale to an ETF. The second thing, which I think is a little bit more under the radar, is the turmoil in the Middle East, and what that means for countries that hold a lot of petrodollars. It's not lost on anybody that the US dollar and the euro to some extent has been weaponized in the last couple of years as tools of economic warfare. And if you're holding a lot of dollars because you are an oil exporter, and you're getting nervous that the Middle East could devolve into something that's worse than it already is, and it's already terrible, then it wouldn't be an unreasonable thing to try and get some of your dollars into something that is outside of the banking system, and some of your euros out of the European banking system. And I do think that some of those flows have occurred, and it's not exactly a flight to quality, but it does mirror a little bit what gold has been doing, and it is, Bitcoin is digital gold. And so I do think that that's contributed to some of the positive dynamics in the market.
Thanks, Paul. Thanks for joining us today. We sit here today, Bitcoin's up 100%. We have other crypto assets up 100%, some even more. I think we can call this maybe the start of another bull market. The macro backdrop today, though, is very different than the macro backdrop at the start of the last bull market. Last time, we had rates at zero, the Fed was easing. Now today we have rates at 5% or higher. We have QT going on. Does that change the way you think about or position yourself in the crypto markets? And does it change the way you might bifurcate the crypto markets? So do you treat Bitcoin maybe differently than the other assets, or does it not matter in your mind?
I think the biggest difference between you're right. The macro is very different. The last rally was, or the last bull market was fueled by incredibly easy monetary and fiscal policy born out of the pandemic. The truth is that in spite of the tightening in monetary policy globally over the last 18 months, government spending is still pretty aggressive, and so the fiscal side is still a tailwind for digital assets. But apart from the macro, I think crypto specifically, the last bull market was built on smart contracts and a lot of crypto native exploration in decentralized finance and everything that kind of that was built in 18 and 19 that started to be used in 20 and 21, and there was a lot of crypto native excitement. I think this next phase of development in crypto is going to be very different, and it's going to really be much more a DLT story, which is distributed ledger technology, which is what all the traditional financial players talk about when they talk about crypto. And every single bank and financial institution in the world is it has a digital ledger technology roadmap, and they're all investing a lot of money in it. And I think the institutionalization of this asset class is really what's happening next. And I actually suspect it's going to be much more sustainable and much more powerful than kind of the boom and bust cycle that we saw during 2021 bull market.
So one of the issue I kind of have with that, Paul, is I love to kind of flesh out the idea of what does tokenization, what is that institutionalization of the crypto or blockchain kind of technology kind of look like? Because I agree with you. I think that this is going to be very sticky for institutional participation. But the challenge I have is, many of these institutions are building their own private network, for example. It's not really being connected with public networks. It's very separate from the idea of having liquid tokens. And that's kind of the mantra, right? Like blockchain, not Bitcoin. But when you see this new kind of crypto market cycle, like how do you envision these institutions participating in it?
Well, look, a very powerful and obvious first step is stablecoins, and potentially stablecoins that have yield. We're involved with Maple Finance, which is working with them to tokenize treasuries, and I think simple things like stablecoins, like tokenized yield, are kind of the first step. As soon as Congress allows it, and I do think it's coming, pretty soon, maybe not soon enough, but certainly in the next year or so, I think we will have banks be able to be involved in stablecoins. They will have tokenized deposits, and I think that's the first step. And then eventually, having atomic settlement on blockchains for all financial transactions, and where financial markets can be open 24/7. This is all, and which is right now native only to crypto, is going to come to the traditional financial system. Bitcoin itself, as Larry Fink has said, is potentially the world's first global currency. And I think of it a lot, as I said earlier, as digital gold. But that's only one part of the entire crypto market. It's the largest portion of the crypto market right now, but I think over time we're just going to see so many other assets tokenized, and value will be transferred over the internet, and that's really what crypto does.
Interesting. And So Maple and what you guys do with Maple has been great. And it's been awesome to see the growth in real world assets on chain. So that's been treasuries where a lot of that has been focused right now. Where do you think we might see growth kind of as a next stage? You mentioned stable coins, and kind of yield bearing assets, but what other types of things do you think might work well on chain?
Well, I think identity and things as simple as KYC, but all aspects of identity are really best handled in a decentralized system where individuals can actually control their identity. I mean, right now, you kind of trust your identity to any number of providers, whether it's the healthcare system or the credit rating agencies, but and there's having digital identity that is where things can be verified, and you can use ZK to ask questions to find out, hey, did this guy actually go to Harvard? Does he actually have a Harvard diploma, or is he lying about it? And you can find out things about your health records without revealing absolutely everything. I see something like that as being a real non-financial use case, and so we're quite interested in that. Our venture people are quite interested in that space.
Yeah, I fully agree with that. I think just giving it opens so much more. I think many in crypto don't like KYC, but I think what you can do when you do have KYC is far more advanced than what we can do right now.
Look, in a world of deep fakes and AI and things like this, being able to have mathematical proof of something becomes more and more important. And then when you start thinking about machines dealing with other machines, crypto is integral to that process.
So Paul, I was kind of curious because I agree with you that so far we've seen this kind of decoupling, and Bitcoin and crypto in general is kind of operating on its own. Like, it's very idiosyncratic relative to everything else, which is great, especially if you're a traditional macro hedge fund guy. Then you can just say, you know what, it's not easy to come by these kind of stories that kind of sit on its own. So it's nice for now, but my outlook, and I think we've kind of discussed this before, is that we probably are still going to get a recession at some point in the US. And if that happens, do you think that we can still remain uncorrelated from the rest of the risk environment?
The correlation, look, over long periods of time, crypto has been really uncorrelated to equities, uncorrelated to tech stocks, uncorrelated to interest rates, uncorrelated to currencies. And at times, it's very correlated. And so these are shifting relationships. I think if you see a horrendous risk-off environment where there's a clamor for liquidity, kind of a crashy type environment like what we saw during the beginning of COVID, well, then in that kind of environment, as they say, they throw the baby out with the bathwater, everything gets liquidated. And I suspect crypto will correlate with risk assets if we hit kind of that type of a tipping point. But beyond that, I do think that crypto has the capacity, certain crypto assets will trade somewhat uncorrelated. And it harkens back a little bit to how certain growth technology companies did coming out of the financial crisis, right? Everything got thrown out during the financial crisis. It was a banking crisis. It didn't really affect Apple or Google or Amazon, right? But those stocks got destroyed, but they were the ones that recovered the fastest and grew the most in the subsequent years after the financial crisis. And I think similarly now, if we go into a recession and we have kind of a risk-off environment, it's not going to arrest the development of blockchain technology. It's not going to change the transition that's going on in the financial arena, where distributed ledger technology is being used more and more, and the financial rails of the 21st century are going to keep going in the direction of crypto. So it will probably recover faster and rally a lot stronger after that kind of a recession trade, if you will.
So I know I kind of pose that question as the hypothetical, but more to the point, what do you think is going to happen with the U.S. economy over the next 6 to 12 months?
I think the U.S. economy is slowing. I think the global economy is slowing. I think the consumer is slowing down, so I'm not predicting a recession, but I do think we're ending the tightening cycle for now, and it's going to really. It depends. There's a lot of variables that are hard to predict. If the geopolitical situation gets worse and oil goes to 150 or 200, we're going to have a recession. And so I think all that's possible. We're also hearing on the company specific level from some of my friends in the equity markets, business has really slowed down and it's not really showing up in the macro data yet, but it's going to show up in the macro data. So I think we have kind of a moderation in global growth that is, but I'm not sure it's going to tip into some horrible recession. I don't necessarily see the big imbalances that you might expect before you have a really bad recession.
Yeah, and I do think that what we've seen as far as fiscal expansion has definitely kept us away from seeing a slowdown in growth sooner rather than later. But that kind of brings up the other side of let's think about what's going on in the fiscal situation, and not just in the U.S., but let's say what's going on in Asia with Japan, for example, who also has their own kind of inflation and monetary policy quandary that they're dealing with right now. It's leading to an issue that I think is, by pushing the long end of the yield curve up in the U.S., which is where is demand for U.S. Treasuries going to come from? Because, it seems, if anything, that more and more we're losing buyers of this. So do you see this as a potential issue?
I don't really, I don't see it as an issue right now. I think we're in a transition after a 40-year bull market in fixed income. And really, it was an environment where we had some very major deflationary or disinflationary pressures. I think the two biggest catalysts for disinflation were the Berlin Wall coming down and having all of these, highly educated, capable Eastern Europeans being able to all of a sudden flood the high-skill labor market, and what that did to wages. And don't forget, in the 70s and the early 80s, when we had high inflation, it was very much a function of wages pushing inflation higher. So that was a big disinflationary event. And then, of course, China entering the WTO gave us 20 years of goods disinflation, and free trade of free trading labor markets and free trading goods markets globally put us into a position where we had we couldn't achieve very high inflation even when labor markets were tight and even when growth was very strong. And what happened was we wound up, because of that, getting this negative term premia into the bond market, which was very different from what we saw in the 60s and 70s. And we are now transitioning from negative term premia. We're probably at more neutral term premia now. We probably are going to go to positive term premia. And why is that the case? Well, the peace dividend from the Berlin Wall coming down is basically over. And we basically, started trade wars everywhere and tariff wars everywhere. And so the goods deflation that we were experiencing with offshoring to China and everywhere else basically is been reversed. And obviously, we had a supply shock during COVID that spiked inflation. But beyond that, as I look forward over the next 10 years, it's very easy to imagine a situation where it's very hard to get back to a real sub 2% inflation rate in the United States or globally. And as such, we're going to have, instead of a negative term premium where the expectation is constantly that the asymmetric move in the bond market is to lower yields, we have positive term premium, which is perhaps historically a more normal environment. And I think that transition from a negative term premium to a positive term premium is uncomfortable for market participants who only lived through negative term premium, and it makes them think, that bonds are never going to be able to be absorbed. But I suspect that's not really the case.
So, Paul, I'm curious. You mentioned a couple of kind of very large disinflationary trends in the past, and it feels like potentially we have one upon us now with AI. Like, how do you think about that within the context of disinflation or inflation?
Yeah, technology would have been the other third big disinflationary force. I didn't mention it because I actually think it's still a disinflationary force, and technology can be an offsetting factor, and obviously, if productivity growth is very strong, that would be the thing that keeps us from having an inflation problem. I'm not bearish on inflation particularly at this stage. I was just pointing out that the bond market doesn't have a good reason to have negative term premium anymore.
Got it. That makes sense. So we've spoken about a lot of things that have, I guess, given a pretty positive setup for digital assets, certainly of late, and potentially kind of going forward. I'm curious, like, what is there that concerns you? Like, is it possibly the activity levels in Ethereum kind of trending a little lower? Like, is it something? Is it around security and hacks increasing? I'm curious, as someone that's looked at the space for quite some time, like, what are some of the things that you would like to see improved that maybe we're not doing quite so well?
Look, I think some of the complexities, and we live it every day here running a digital asset fund, it's very complex, still way too complicated for most people to use crypto. So I think applications that abstract away that complexity so that individuals can use it is important. I think it's coming. I think Coinbase is doing their best to help with that, and other businesses will do that. Banks will do that as they are allowed to be involved. And I do think use cases that are kind of non-financial and non-speculative, as those, whether it's gaming or things like identity or social networking, are all use cases that will help facilitate adoption.
Yeah, I couldn't agree more. I literally can't wait for that first AAA rated game to come out and like people just play it. They don't know it's got anything to do with DLT technology or blockchain technology, but they just enjoy it for what it is. So I couldn't agree more. So I'm going to put you on the spot a little bit here. The move higher has been quick. It's been aggressive. Where do you think we go from here? Next couple months, are we going to hold these levels, or do you think we kind of retrace back to our previous range?
No, I think in the broadest sense, we're not going to easily revisit the levels that we got to at the end of 22. I mean, remember, 2022 was like a major financial crisis in crypto. It started obviously with excessive valuations that were created by the super easy policies coming out of the pandemic. So at the beginning of 22, we were very correlated to the interest rate cycle. And as real interest rates went up, crypto went down, and every asset was repricing to higher real interest rates. But then we had Terra Luna and all of the failures that happened afterwards, BlockFi, Celsius, Voyager, obviously culminating with FTX and Genesis. And it was a real financial crisis environment, and there was a ton of forced liquidations. So like Bitcoin below 20,000 and ETH below 1,000, those prices shouldn't really be in our mindset. They were distressed prices. And so while I'm not sure that we're entering the next super bull market, I do think we can hold much higher prices than we were at the end of last year. We've had a pretty good year in terms of price appreciation. There's going to continue to be adoption. The technology continues to improve, and I think the opportunity set for asset appreciation in crypto is going to be pretty decent going into 2024. We have the halving cycle coming, so we're pretty constructive.
Paul, on the show, especially for the last 2.5 months, we've really talked a lot about Bitcoin, as that's sort of taken the air out of the room. But now you run a liquid fund in the crypto space. What outside of Bitcoin really gets you and your team excited? We've had some ETH maxis on the show before. We have people that love Solana, even things further out the risk curve. Kind of, where do you sit, and sort of what gets you most excited?
So my team is quite excited about Solana. And the technology and the whole ecosystem there, and the fact that it's quite differentiated from some of the other L1s. And my guys are also pretty excited about ETH scaling solutions. So kind of looking at things like Optimism, and which of course is the engine that runs Base, which is your product, and Arbitrum, and some of the other ETH scaling solutions. They're pretty excited about, particularly as we move toward implementation of EIP 4844. And on the venture side, they are trying to invest in identity, as I talked about earlier, as well as businesses that are kind of reimagining how the crypto financial system works, because obviously, the shadow banking system that was developed, in 2021, 22 was not successful, and so whether it's on chain or off chain. Any kind of rebuilding the financial infrastructure is something that we're interested in. And that's
perfect. Well, Paul, thank you so much. I hope you're going to stay with us for the rest of the show, and we'll certainly bring you in on other topics as we go. I think one thing that I really enjoyed speaking with you is that your breadth of experience across so many different asset classes is so relevant in crypto, because I feel like crypto takes bits from equities, bits from FX, bits from commodities, and it's kind of bringing them all together. And there's very few people we speak to that have got such experience across all of them. So thank you for joining, and we'll bring you in later in the show. George, over to you. I know there's some news that's come out as we've been recording, so maybe we can touch on that.
Yeah, exactly, Ben. Thank you. So the elephant in the room, obviously, as you've discussed with Paul just now, was BlackRock's spot Bitcoin ETF appearing on the DTCC website, which suggested that IBTC is a new Bitcoin iShares ETF ticker. And as you just mentioned, while we were recording this call, actually, there was some breaking news that this ticker has been taken down. So we'll have to see as to what that actually means.
And George, on that one there, so it got taken down, and what's been the price action? Presumably we're reversing a little bit.
Yeah, so we've seen some corrections. Obviously, if you look at the slide, we're trading around 34.5, 34,700. So I've seen the market move down a couple percent just on that news or that headline, but we're still in the high 33s at the moment.
Okay, perfect. Well, hopefully it gets reinstated soon and we can reverse back the other way.
Yeah, exactly. But yeah, I mean, fact is that it is the first Bitcoin spot ETF on that website. And to be clear, there's obviously no regulatory approval yet, but BlackRock is clearly leading in these logistics, if you want to call it that. And the market has definitely taken that as a signal that the approval is A, almost certain, and B, or imminent, pretty much. So that has really propelled the market higher with Bitcoin trading up to 35K at the highs. So that was 22% up over a week as of a couple of hours ago. And ETH was trading up to $1,850. We didn't really have that in quite a while. And while that was obviously the trigger, I think there's a couple of other things playing into it, making the move even more explosive. Just to add to a couple of thoughts that Paul shared earlier in the conversation, I think, overall, in the grand scheme of things, positioning has been, relatively speaking, on the lower side. Liquidity, you can probably make the same case if you compare that to like a year and a half ago, relatively speaking, lower. And then there were some technical factors. If you dissect the move and look back to last week, the first thing was Bitcoin holding above the 100 and 200-day moving averages, and then taking the key levels, whichever way you look at it, around 31,400, 31,700, causing, again, depending on the source that you look at, 320, as David mentioned, to up to $400 million of liquidations across the space. The other interesting thing is that Bitcoin dominance is now just under 54%. So that's, again, the highest level this year, and in fact, the highest level since Q2 2021. So overall, I'd say a pretty positive week for crypto overall. And, you can immediately see the spike of interest across clients from various segments. And it really, reminds me of that Bitcoin meme that I just put up here on the slide from the last bull market, in fact, where you have a massive queue of people looking to buy BTC at 65K, but actually not that many, or / not at all at 25K.
Yeah, I feel like that's very much human nature, but sums it up pretty well. The whole Warren Buffett, be fearful when others are greedy, and vice versa. What else has been happening, George? Any other kind of reasons around maybe the move in ETH or any big altcoin performers?
Yeah, so if you look at altcoins, similarly to the majors, pretty positive price action. A couple of things that stood out to me. So one of the tokens that was leading this rally was Link, one of the first ones to start rallying. That was up 38% over the week. So I think, and that one has been consolidating in a range for about a year and a half, between $4.5, $9.5 or so. And I think many traders will be focusing on that and just looking, at other coins with similar patterns for potential breakouts. And then, the other thing is that if you look at Bitcoin, it's in particular Bitcoin-related tokens that have been also showing some outperformance. So, for instance, BSV is up 33% over the last 7 days, and STX up 30% as well. So that's something interesting. Although we have seen that in the past during strong Bitcoin rallies. And then lastly, on the altcoin side, meme coins, potentially seeing some interest from retail again there. So Pepe, for instance, is up 43% over the last 7 days. But looking at ETH, and to answer your question, that obviously, if we go to the next slide, I think we spoke on this call a couple of weeks back about this whole underperformance of ETH vis-a-vis BTC, and some of the angles that we're looking at is number one, positioning, among other things, then L2 transaction volumes, sucking some air out of ETH, so to speak. And I think another angle, which is represented by this chart here, which is interesting, is dealer gamma positions in Bitcoin versus ETH, especially if you dissect the price action over the last couple of days. So if you look at that chart, basically you can see that dealers yesterday were quite short gamma in Bitcoin. and basically had to keep buying spot Bitcoin to stay delta neutral on the options positions. But in ETH, it was actually the opposite situation. They were long gamma, so they had kept having to sell spot ETH as the market was going up, sort of naturally putting some downside pressure on the ETH BTC cross, if you will. So I think that sort of contributed to the moves that we've been seeing.
Perfect. Thank you very much for that rundown, George. Hopefully we don't have any more headlines through the rest of the call. Now moving on to trade flows, Greg.
Yeah, thanks, Ben. It's been a really fun week to be on the desk. We've seen volumes pick up quite a bit. Yeah, we have a chart right here. The key thing for me is we've seen obviously these very high volume days when news breaks. But in between, we're still seeing good interest in the market, and that's coming from both the institutional side and the retail side. And that's something I look for that really you need to have a healthy run higher. Obviously, now our flows have been concentrated predominantly in Bitcoin, given everything we've talked about on this call time and time again. But one notable thing is we've had a number of clients actually come in and put relatively large positions on in Bitcoin, not so much because of the ETF, but more because of the long-term fiscal problems they see in the US, the deteriorating macro backdrop where they think that Bitcoin could possibly be a digital gold-like asset. A lot of the things that Paul spoke about earlier. And again, I think that's a really positive thing to have develop. We can't just hang our hats entirely on an ETF. That won't get us there. So it's very encouraging that we're having folks put real money to work with varying thesis.
That's super interesting here. And Greg, I would love to bring Paul in. So Paul, as you speak to some of your, former colleagues that are still in the macro space, is Bitcoin on their radars? I mean, it's a narrative that we like to talk about within the industry, but I'm curious if it actually kind of extends to folks still trading macro books.
It's very much on everybody's radar. It's on CNBC all day long, and virtually every macro market participant that I talk to pays some attention to the price of Bitcoin and the price of Ethereum. I mean, they're not in the weeds on the rest of the digital asset space, but for sure, Bitcoin is now accepted as a part of the macro landscape, and people pay attention.
And when they look to kind of move their books around, do they have a way of accessing Bitcoin? Like, I guess you've got like GBTC is kind of imperfect. You've got futures. Like, how do people think about it? And as and when the ETF launches, is that potentially another path that people will use to add exposure to their books?
Yeah, I think for sure access is limited. And there's probably I would venture to guess that more than half of the market participants in traditional markets do not have a way of accessing Bitcoin. So the ETF will provide that access for the entire equity space. Right now, macro funds tend to trade CME futures, which is segmented obviously a little bit from the physical crypto markets that Coinbase provides an exchange in. Perfect.
Thank you for making the plug on Coinbase. I would have been in trouble if we hadn't brought up spot Bitcoin. So thank you for that. That's super interesting. Greg, what else are we seeing on the flow side of things?
Yeah, the other again, encouraging flow we're seeing is we're starting to see people come back into the market for Ethereum. Now, in the first 6 months of the year, ETH was kind of our maybe the asset we traded almost the most of. A lot of VCs, for instance, view it as sort of their crypto beta. That bid fell away, in June after the Bitcoin ETF news, hit the tape, and everyone started to focus there. And because of that, we've seen the BTC ETH cross underperform quite a bit. Now we're actually seeing, as Bitcoin's kind of pulled the entire market up with it, we're seeing some of those same folks and new accounts as well come in and look to add ETH here. I think it's sort of a situation where nobody wants to miss the rally. Additionally, they're looking for the next trade. The GBTC trade is nearly done. We're at a 14% discount, so a little wider than I would have expected. But now everyone's looking to the next trade, and whether that will be ETH or something else, we don't know. But people are placing their bets.
Yeah, that makes a ton of sense. I know we've discussed the potential kind of mean reversion there for ETH a little bit. It's certainly had a torrid time this last 6 months or so. Activity down and interest down, and at BTC, I think you said it a few times, just sucking the air out of the space. Now, Greg, we normally have a chart here on ETF timelines, but given all the news we've had, is it almost not quite as relevant as in previous weeks?
I mean, we could put it up. It's turning into this thing that, it's almost like the market thinks it could come at any day. And it may. Yesterday we got the news that the BlackRock ticker was up on DTCC's website. That was part of the cause for this aggressive move higher. Today we found out that it sounds like that ticker's been now taken off. I can't say how meaningful that is, but certainly the market feels like this could come at any day, and it very well may. However, that January date, I think, is a drop dead date. So, between now and then, be ready.
Perfect. Thank you, as always, Greg. Appreciate it. Sid, DeFi and Web3, please. What's been going on?
Yeah, a couple of big launches today and this past week in DeFi and Web3. One was just today, a few hours ago, the DYDX team announced that their DYDX chain is now open source and live, and that it'll be going live on mainnet pretty soon. Effectively, what this means is they've kind of open sourced the code base on their GitHub. Folks can investigate it, and then what this enables is for the actual development team that's called DYDX Trading to kind of step away from this themselves and have other ecosystem players kind of run the chain and continue it. So kind of decentralizing the entire ecosystem quite a bit more. What it is, it's basically a standalone kind of app chain for the DYDX perpetual exchange, and it can supposedly offer up to 2,000 transactions per second, so scales up the throughput quite a lot from what it is right now. And likely what this means is probably that the token itself, the DYDX token, probably plays a larger role in governing this ecosystem, and then how different partners and players are incentivized to actually run nodes and support the chain. That's one big launch, and then the other one is Celestia.
Just quickly on that one, Sid. So remind me, that's built on Cosmos, is that correct?
Yeah, exactly.
And once the DYDX trading team kind of decentralize this and allow others to work on it, what do they then do? Are they like focusing on product, or like what I guess what's the next step for them?
Yeah, likely they'll take a similar path as Uniswap. The team will probably focus more on a UX layer to interact with the protocol, having the website up and running, and potentially taking some fees from that, and other options to access the protocol, improving on their mobile apps and other UX improvements.
Got it. And have we, I guess in terms of like volumes for DYDX, have we seen those change as a result of this announcement, or just generally tick up with the market move?
Yeah, nothing out of the ordinary. Just a general, tick up along with every other asset. But likely once mainnet goes live, and then we see kind of where the token will be used, we probably might see a shift in the token itself.
Got it. And Paul, would love to bring you in here. We didn't discuss kind of perp exchanges and things like that, but as you look at the trading landscape and you've got a ton of different options of kind of where you trade and how you trade, something like DYDX or perhaps GMX, like how do you think about these platforms and their importance in the, I guess, the new financial infrastructure going forwards?
My opinion is that for institutional capital, we really can't use things like that. We have requirements with the SEC to have qualified custody, and so it's very difficult for us to leave assets at something, an on-chain, decentralized exchange. We're very comfortable, obviously, and we're clients of Coinbase. Coinbase has qualified custody. That's where we have to trade right now.
Perfect. That makes a ton of sense. So more of a retail or ex-US phenomenon for the time being. Super. Thank you. Sid, what else have you been keeping an eye on?
Yeah, one other similar chain kind of launch is Celestia. Celestia is a project that's kind of focused on building a modular blockchain ecosystem, specifically on the data availability front. This is kind of this whole vision that Ethereum as a whole is going to be split up into multiple components that are specialized at doing certain things. And specifically, data availability helps with scaling with rollups, which currently, like Optimism and Arbitrum, which currently post a lot of their data eventually to mainnet Ethereum. They can use Celestia as a data availability layer. And the mainnet for Celestia is scheduled to go live sometime this month, potentially by the end of the month, according to the GitHub repository. And along with it, also they have a token called the TIA token, and it was given in an airdrop for certain wallets, and which was eligible to claim starting in September. And the window to claim closed in October 17th, and actually less than a third of the wallets that were eligible for the token actually claimed the token. So I believe the existing wallets that claimed will actually be getting more of the token allocated to them. So that's something else that's been happening in DeFi this week.
Cool. Always a lot going on, and thank you for making it a lot more clear than it is. It's always pretty complex. And anything else you're keeping an eye on? Things that we should be looking out for?
Yeah, absolutely. So there's a slide I added on just what were the key tokens that were moving as a result of this move on chain in terms of on chain dexes, apart from the majors, ETH, BTC, wrap BTC, and stable coins. We see actually ARB and CRV USD as kind of the largest volume gainers on this move up, which is interesting, especially with November coming up, and with ARB, there was a huge ecosystem vote that went on the previous month. We discussed this in previous calls as well. Basically, a bunch of projects on Arbitrum will be getting ARB incentives going live next month, potentially to incentivize liquidity, trading volume, et cetera, and other use cases. So something to look out for ARB ecosystem participants. So that's one thing keeping an eye on. And then the other is, this is a recurring thing, social fi, right? Which is something that we've been covering for the past few calls as well, with FriendTech. It actually saw a pretty large sell-off over the past few days, contrary to the rest of crypto. Specifically, this was started by its largest portfolio account. It was called Vombatus. It just had an animal profile picture, but what that account had done was they had basically bought a bunch of their own keys, their own kind of FriendTech profile keys, and in one shot yesterday they'd sold almost all of them, 176 of these keys. This triggered a pretty big sell-off across the FriendTech ecosystem, so a lot of large profiles started selling off, a bit of a cascade effect. And there's also other alternatives that have come up. There's one called New Bitcoin City, another social finance project in a similar vein to FriendTech, and other alternatives. So TBD on whether the momentum there sustains, whether things calm down a bit after this week, but we'll see how it goes.
Never a dull day. I'm curious to see how the other FriendTech clones get on and whether they can innovate away from some of the move down. But Sid, thank you as always. Always great to know what's going on in Web3 and DeFi. That is a wrap for this week. I really thank you to the whole team, and thank you for Paul for joining. And good luck out there. Let's hope we continue this move higher, and we'll see you next week. Take care.